Hi, my name is Zach Richards, and I'm a director here at DWD. I want to take a minute to provide a quick update on recent developments surrounding the Employee Retention Credit, or ERC. Previously, under the CARES Act, an entity that borrowed funds under the Paycheck Protection Program was not eligible for the ERC. However, the Taxpayer Certainty and Disaster Tax Relief Act of 2020 was enacted on December 27th and amends and extends the ERC under Section 2301 of the CARES Act. First, let's talk about the Employee Retention Credit as it relates to 2020. The credit is for qualified wages paid from March 13th to December 31st. In order to be eligible for the credit, a business must have been either fully or partially suspended by a governmental order related to COVID-19 or had a 50% drop in gross receipts in a given quarter in 2020 compared to the corresponding quarter in 2019. If you meet one of these eligibility requirements for 2020, the amount of qualifying wages are up to $10,000 for each employee, and the credit is 50%. So you could potentially get a $5,000 credit for each employee. For 2021, the requirements are not as stringent, but the credit is only available in the first and second quarter. Instead of the requirement in 2020 of a 50% drop in gross receipts, you only need a 20% drop in gross receipts in 2021, as compared to the same quarter in 2019. Additionally, the qualifying wages of $10,000 gets applied to each quarter instead of in total, and the credit is for 70% instead of 50%. So you could potentially get a credit of $14,000 for each employee based on $10,000 of wages for each of the first two quarters and a 70% credit. There is one caveat to the employee retention credit. You cannot take the credit for wages paid to employees performing services for the employer. In other words, the wages would have to be paid to employees to simply sit at home and not work. However, there is a safe harbor that allows small businesses to receive the credit even if the employees were paid to do their normal job duties. For the 2020 credit, a company must have 100 or fewer full-time equivalent employees in 2019. And for 2021, the threshold increases to 500 full-time equivalent employees. A common question we have been receiving is what qualifies as being fully or partially suspended by a governmental order related to COVID-19. One example the IRS provides is a restaurant that is forced to close its on-site dining due to a governmental order closing all restaurants, bars, and similar establishments for sit-down service. The restaurant is allowed to continue food or beverage sales to the public on a carry-out, drive-through, or delivery basis. In this case, the restaurant's business operations are considered to be partially suspended because a portion of its business operations is closed due to the governmental order. The IRS then provides another scenario where the restaurant is allowed to offer indoor dining service, in addition to outdoor sit-down and carry-out service, provided that all tables in the indoor dining room must be spaced at least 6 feet apart. Under the facts and circumstances, the governmental order restricting the spacing of tables limits the restaurant's indoor dining service capacity and has more than a nominal effect on its business operations. During this period, the restaurant's business operations continue to be considered to be partially suspended because the governmental order restricting its indoor dining service has more than a nominal effect on its operations. So let's look at a hypothetical scenario. Let's say there is a business that meets the requirements for the employee retention credit in 2020, as well as both quarters in 2021. This business has 50 employees, and each employee makes $40,000 per year. For 2020, the business would have $10,000 of qualifying wages for each employee. The 50% credit is $5,000, and for 50 employees, that equates to $250,000. Then as we move into 2021, each employee earns $10,000 per quarter. So each employee would have $20,000 of qualifying wages over the 2 quarters. With the 70% credit, this equates to a $14,000 credit per employee for a total of $700,000. So a business with 50 employees could receive almost $1 million in credits. Now, one important thing to keep in mind is that we are still waiting on further guidance from the IRS. However, you may want to start evaluating the employee retention credit to see if your business might qualify. And if so, what type of planning should be done to maximize the benefits of both the employee retention credit and the Paycheck Protection Program. As always, feel free to contact your advisor at DWD with any additional questions you may have.